Yes, sir. Yo, what is going on, guys? Welcome to another video. And please don't mind the thumbnail too much. I just put Jeremy at the top of it because I just like to make fun of him for just not knowing anything about stocks. But no, this is not a Jeremy LaFave video. Obviously, you can see the title of his video and the fact that the video came out 3 days ago. The title was Why the Stock Market Will Go Up 7% Next Week. Obviously, that did not happen. Actually, the complete opposite of what the title of his video was actually happened this week. It looks like we about to go down 7%. You know what I'm saying? But anyway, let's go ahead and get into the real stuff here. Let's actually talk about what's going on today, tomorrow, and for the rest of the week regarding stocks, markets, economics, all that great stuff. So let's go ahead and get right into it. U.S. consumer confidence once again came in lower than expected, and consumer sentiment tumbled to 16-month lows, right? This result came from the CB Consumer Confidence Survey, which declined to 98.8, the lowest since February of 2021. That is about 16 months, with the expectations index at the lowest since March of 2013. Remember, there it goes again. I keep telling you guys, we keep reaching all of these historic numbers. Pay attention to that there's something there. There's a reason we keep reaching all this stuff. This is a historic time. And so the S&P 500 and the Dow Jones did respond to that. They did move down after that report. And so the reason why the CB consumer confidence numbers, I want to make sure we break this down and understand this. The reason why those numbers are so important is because it's a leading indicator of consumer spending, which impacts overall economic activity, which starts to bring up more recession fears, right? So in other news, the Richmond Manufacturing Index just came in at negative 19 when the expected was -4. So yeah, that's a pretty large gap in between there, you know? And so the Richmond Manufacturing Index is actually an indication that the manufacturing sector is severely contracting. Once again, both of these signal a possible recession. That's why the market didn't like that. That, in my opinion, is why the market actually moved lower. Now, I also personally believe that there's another reason for today's sell-off. And I think that reason is because of tomorrow's market moving events. We actually have two. The main one is the GDP numbers come out tomorrow, right? And then the other one is Powell actually speaks tomorrow. I know, we're so tired of the Fed chair and the Fed members speaking, aren't we? I know, I am too. I wish they would just shut up, but they won't. So we got to deal with it, right? Now, let's actually go ahead and talk about the GDP numbers, right? And the reason why, remember, they come out tomorrow. And the reason why I want to talk about that is because I've actually seen some confusion going on about it on social media and different things like that. Some people actually think that tomorrow's GDP numbers could officially signal that we're in a recession. That's what I've been seeing on social media from Twitter accounts that are like verified. I'm like, holy cow, that's not true. So we have to correct this, right? So this actually isn't the truth. We do not find out if we're officially in a recession tomorrow. The reason why is because the GDP numbers that come out tomorrow, which is June 29th, is actually the third look for Q1. Those are not the Q2 GDP numbers. That is the third look for Q1. And so now it's important, but you know, those numbers are important. Don't get me wrong. Like, they are definitely going to move the market regardless of what happens. But I just want to make sure everybody understands that regardless of what happens tomorrow, we're not going to be officially into a recession until Q2's GDP numbers come out. And it's also important to understand that tomorrow's numbers are not for Q2, like I said. Now, Q2's first look GDP numbers get released on July 29th. That is something that everybody needs to understand. So June 29th, which is tomorrow, is important, but it's not as important as July 29th is going to be. Also keep in mind that July 13th, you do have CPI data that comes out. You're also going to have the Fed that is going to do their FOMC meeting. So you got some pretty interesting catalysts in July. But yes, July 29th is actually the date to look out for, because on July 29th, we actually find out if we're officially in a recession. That really is our moment of truth. So although tomorrow will be important, do not get confused and think, oh, well, whatever happens tomorrow, we're going to probably be in a recession. No. We don't find that out until July 29th. That is extremely important for you guys to understand. And in other news, the news just came out that Tesla actually laid off hundreds of their autopilot employees in California. So this is more layoffs that Tesla is doing. And then also you have some very unfortunate news, especially to me as a person who loves Disney. Unfortunately, it just came out that the board of directors have extended Bob Chapek's contract for another 3 years. For most of you guys who know, this is the CEO of Disney. This is the guy who, in my opinion, has not done a good job, on behalf of investors. And I mean, obviously some people might like him, but I'm not happy on how he's been handling the company recently. And he's starting to make me, them extending his contract is starting to really make me rethink that investment. I'm just not so sure that I want to buy Disney anymore with that. It's not cheap to the point where I want to buy it. Let me be very clear on that. I really want to buy Disney somewhere in the 80s or lower. But for me, with him as CEO, I mean, I think the stock price is going to continue to be a train wreck. I'm just not a fan of his leadership. The other CEO they had before him was way better. And yeah, I'm not saying that I won't buy Disney, but I'm just going to be a little bit more cautious, and I'm going to be a little iffy on my investment. Because always remember, guys, regardless of how much you like a stock, there's always another stock. There's always another play. There's always something else, another company out there that's good that you can put your money in. So as much as I like Disney, I don't want to get emotional over it. And the fact that they're leaving that bonehead, that freaking moron as CEO, really upsets me as actually a current shareholder, because believe it or not, I actually do own Disney already, but I wanted to buy more, hopefully in a different portfolio. But not so sure that's going to happen anymore. And so, yeah, I think that's it. I guess the last thing we can move on to is crypto. We do have some crypto news, so I'll just go ahead and go over that too. So actually what happened was Crypto.com actually just recently removed 13 cryptocurrencies from its Earn program. Early this week, Crypto.com took to Twitter, revealed that it was dropping support for 15 cryptocurrencies from its Crypto Earn Rewards program. Those crypto and currencies, it's a bunch of cryptos I've never heard of, to be completely honest with you guys. The only two out of this list that I've heard of is Shiba Inu and Dogecoin. Everything else, I don't even know. But just for those who don't know, Crypto Earn basically enables investors to accrue daily rewards for investing in crypto assets. Yes, very similar to Voyager Digital. What do I mean by that? Well, the company offers up to 14.5% in rewards on tokens like Tether, Polkadot, Polygon, and others. There goes that thing we've been talking about. You got to be careful of these exchanges and these brokerages that offer these high yields just for holding your crypto in there. Very risky, very risky. You got to think about what is it that allows them to be able to do that, right? And so it's also important to note that also 2 weeks ago, Crypto.com actually slashed 5% of their employees, citing a market downturn. And the other last part that I want to say to you guys is what I've always been saying. You have got to take your money off of these exchanges. Unfortunately, a lot of these crypto brokerages took insane risk with your deposit money. They took your deposit money and they lended it. And unfortunately, the 3AC, Arrows Capital, and some of these other places that they've lended it to are not able to pay them back. And so I don't know why these crypto brokerages took such insane risk with your money, but that's what they did. So once again, just want to reiterate, I personally would not have my money on any of these exchanges. I will stay far away. That's just me personally. And so, yeah, there you guys have it. There goes your update for the markets and everything like that. And so that'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.